Today, January 29, we detected unusual options activity on Google stock, Alphabet, which causes us some concern for earnings. Happening tomorrow, January 30th, and so we wanted to update everyone because on Friday, January 26th, we went over our Google earnings trade. So we'll put a link at the end of this video if you missed out on that video. So without further ado, let's go over the data from today that is very concerning. As you can see from the options time and sales tape, we had 6,000 contracts for the March 15, 2024 expiration cycle. 155 strike calls. They were selling these calls and buying the 155 strike puts. And so when we take a look at the chain for the 155s, we can see here that the open interest on the put side was only 934, which is much less than the 6,000. So we know that these are opening trades. And so that is concerning. We believe this trader was selling the 155 strike calls, using the credit to buy the 155 strike puts. And when you analyze this trade, you can see that this is a short bearish synthetic negative 100 delta. As Google stock goes down, this becomes profitable. If it goes up, it is a loss. So clearly it is a bearish position. And also, it's also very clear to us that this trader has a lot of capital because they sold 6,000 contracts. You can see that one of these call options are being sold naked. And in order to do that, requires about 3,500 buying power. So we multiply by 6,000 contracts. This trade requires $21 million. Okay. Now, one thing to also keep in mind is that even though this is bearish and very, very concerning, it lowers our probability of profit, that there is also a good chance that this trader has a lot of shares of Google and that this is a hedge on their Google shares. So, for example, let's say they have Google shares, so we can add this into our analysis. As you know, 100 shares of stock equals 1 contract of options. And so this is what their trade would look like if they had Google stock that they were hedging for this earnings event. You can see that at expiration, this blue line here is plus 100 above the zero line, meaning that that's profit. Okay, so Google can go up or down either way at expiration, which is March 15. We can put the date to about March 15. And once it expires, you can see that anywhere on the price of Google, which is on the x-axis, if it crashes, if it rallies, it is a fixed profit, essentially fixed income. And so this is how a lot of hedge funds operate, where they've essentially lowered their risk to zero. And an event like earnings, they can use the volatility and create a fixed income for their clients. Okay, guaranteed profit. So this is why this type of data, you have to consider that it's not necessarily 100% bearish. Okay, and that is why we have to lower the probability of profit, because it's also possible it could be a trade like this. Okay, so something to keep in mind if you are trading Google, to be aware of the risk involved with earnings. If you are don't want to trade earnings because of the risk, encourage you to go to our website to learn how you can gain access to higher probability of profit trades, where we share with our members only. And make sure to watch our video on Friday, January 26th on Google. If you missed it, put a link here as well. And as usual, please smash the like button and subscribe if you haven't. Have a great day and take care.